Good morning, students. I hope all of you are keeping well. Today, we are going to start with a new topic which we are yet to touch upon, that is gross investment and net investments. Now, for that, you need to revise that the final goods are of two types. What are the two types of final goods? One capital, the other one being consumer goods. In capital goods category, you find out we include those goods which are helpful in further production of goods and services. Which goods I'm talking about? I'm talking about your capital goods. Now, let's take an example in a very simple form of a final good, which is a capital good, of a road, right here, road, which is there in the economy. And let's assume that till 31st of March 2009, we have created 500 kilometers of road. Is it a stock variable or flow variable? The answer is till 31st of March, whatever road we have constructed, it's a stock variable. Now, if in this year, that is 2009-10, let's change it, 1920, we create some new road. As a result of which, on 31/3/20, the total road constructed is 600, is to the extent of 600 kilometers. Now, we must be wondering that how much of the road construction has taken place. The answer is to this extent, which is 100 kilometers. And there is no denying this fact. 500 in the beginning, 600 at the end. So naturally, the road constructed is 100 kilometer. But what we tend to forget at times, that the roads which we have been using in this entire year, 1920, some of the old road must have been requiring repairs, as you find out continuously. From time to time, the road constructions takes place, and the roads are relaid because they have been used extensively, and therefore they call for immediate repair. There are multiple reasons for it. So it will be very difficult to believe that only 100 kilometer of the new road is constructed without repairing some portion of the old road. That comes to a conclusion, then we come to a conclusion that total road constructed during the year must be greater than 100 kilometer. Let's say, for example, 60 kilometer more must have been constructed. This 60 kilometer is in totality taking care of whatever the previous roads were, in addition to 100 kilometer of the new road. So we come to the conclusion that 160 kilometer overall road constructed, out of which 100 kilometer is definitely the new road. Whatever 60 kilometer we constructed extra, That is to take care that the old roads still give us the services which we were getting from them earlier. Now, in national income accounting, we call 160 kilometer of overall road constructed as gross investment and the new road constructed as net investment. In Hindi, we call gross as sakal and net as shuddh. For national income purpose or domestic income purpose, we only take into account the net investment. We never take gross investment because it is not the actual amount of new investment which has taken place in the year. Now, whatever is the road constructed which relate to previous capital which we had in terms of road, that is 60 kilometers, that is referred in simple terms as depreciation. So, what is depreciation in economics? It is the difference between gross investment and net investment. I hope it's quite clear. Gross investment is the total of the capital goods made in this year, some portion of which must have gone in the repair of the old ones. What is the new investment? That is 100 kilometer. And in national income, only and only the net investment is taken into account. But how depreciation is computed? That can be computed by taking the difference between the gross and the net investment. Depreciation is also referred as consumption of fixed capital. What we call it as consumption of fixed capital. Now remember, both gross and net investments are flow variables, right? But the stock of capital on 31,319 and 31,320, 500 kilometer and 600 kilometer are stock concepts. Am I clear? I hope all of you understood it. Thank you.